Okay, this is part 2 of the Trip Over and Lambos Trading Group Weekend Sessions. My name is Mike Taylor. Just a quick disclaimer, this is not investment advice. Just for the video's sake, make sure that everybody knows that we do not offer investment advice. We're just talking about things that have to do with investments. So before we got cut off there, I was in the middle of presenting my Cryptohopper, and we were going through the settings. So you can look at the last video to go through what we've already seen. Don't need to go and review any of that, but I was going over trailing stop loss, and my trailing stop loss is, for those of you who don't know what a trailing stop loss is, a trailing stop loss will look at if you've gotten into a trade. A stop loss is something that you can add to your orders that says you can buy it at this price, but since you don't know which way a stock's going to go when you buy it, right? So you might buy it up here and you didn't know that 15 minutes later or an hour later it was going to drop down here. If you are risk adverse, like you don't want to lose money, you're going to want to say, hey, listen, if this drops to a certain point, that's as much as I can afford to lose. Just sell it off, take my losses, and move on. So that's what a stop loss is. It says buy it here. If it hits a certain point, sell it. Or if you're selling, if you're going the other way, you can say sell it here. And if it goes up to a certain point, you know, get rid of it by buying and take your losses. So shorting, it's the opposite if you're going. But for the most part, we deal with upward trends. And so when you buy something here, you're going to want to set your stop loss pretty much at where the Bollinger Band, the previous Bollinger Band indicates. So again, this is things that I'm writing into my script, but again, just trying to describe what a stop loss is. And let me mute that. Good morning to you and your children. So when it comes to stop losses, whether you're getting signals from TradingView for your stocks, or in this case, we're talking about my Cryptohopper from the last video, you can have a trailing stop loss. And what a trailing stop loss is like, it says, okay, if I buy it here and I want my stop loss to go here, and let's say this is what, 281, and I want my stop loss to be at, let's say, 239. It starts to rise. Well, when it gets up to 347, well, I don't want to lose those profits. And, you know, I had set a stop loss from, I'm just going to draw a little line here. I'm going to draw a ruler. I had a stop loss from here to here that was, you know, 17%. If you look at that little bit in the middle where it's got the parentheses, you know, my stop loss is at 17%. So chances are you have your stop loss is set at 15%. So when this thing starts to rise, you know, when the price is up here, well, you know, back down here, from here, I'm just going to take that ruler again. You know, that's 22% up. And from 22% up back to your stop loss, you know, that's 30%. Well, I don't want my stop loss to be back down there. Now I want to be able to keep that much, right? I want to keep my stop loss at 15%, because now that price has climbed, you know, if it comes back down, I want it to end here and not back down here, right? So if it starts to turn around like it does here, you know, I don't want it to, you know, if it's going up and it's going up, and you know, my trailing my stop loss was back down here when I first got in, and it was only 15%. And this thing starts climbing. Well, if it falls, boom, it's not gonna get me out until here, right? At that stop loss, and I never took the profit back here. And so what a trailing stop loss does is it basically follows this line and just keeps your percentage, so that when this thing falls 50, this one didn't fall 15%, so it wouldn't have got you out. But if it hit here, which it does at the bottom of that candlestick, if it drops 15%, a trailing stop loss is basically every time one of these bars happens and it figures out that the price has gone higher, it figures out what 15% is down from that. It figures out what 15% is from that point, and then changes your stop loss order to that 15% from that point. So that's just a long explanation of trying to explain what these numbers mean. So with crypto, you're dealing with much smaller, much smaller amounts. So, you know, Dogecoin is worth 0.01004, or, you know, we were looking at it over here on WhatsApp earlier, you know, Dogecoin is 2 cents. So when you're dealing with stocks, and when you're dealing with penny stocks too, you know, we're dealing with numbers like that. But when you're dealing with you know, bigger stocks like this, you know, 15%, that's, you know, $60, $70. But when you're talking about crypto, you're just dealing with like little bits of money, right? Pennies. So I have my trailing stop loss set at 1.5%, which is close to 15% if you move the decimal place, right? So this would be 14.9% if I move the decimal place over 1. And then this here, arm trailing stop loss at. So what that tells my hopper to do is that if the thing was to go up, I'm just going to pull up BTCUSD. I'll use Bitcoin for a real example. If my percentage goes up, right now you can see the percentages are more in line with the prices we're dealing with, the factor of 10 in the prices we're dealing with. So when it comes to Bitcoin, you know, I have my trailing stop loss set at 1.5%, which would be about 1.49 is about here. If I had gotten in right at that red bar where I'm pulling down from. So, you know, right around here would be what my trailing stop loss is. Going the other direction, what I have is in that setting is 3.49. So what that says is that I don't want you to move my trailing stop loss until it's reached this much, right? So we talked about stop losses. When I get in on this one and I set a 149 stop loss, it'll set my stop loss here. And then if this number starts to climb from here and it gets up to 3.49%, right? At that point, if this number has risen that much, which we don't have it in this particular instance, but if my stop loss that I had set down here, if this bar rises 3.5%, then I want you to move my stop loss, and don't do it until then, because I'm okay with it bouncing around in this much. But if it goes up this much, that's when I want to take my stop loss and move it up to that 1.5% from this line. So that's what this setting, arm trailing stop loss at, means. And I think I need to change that just a little bit, because I think that's a high number now that I look at it on the chart.
Okay.
Yeah.
So is it a junk
So
food?
so anyway,
Well,
we're just gonna
yeah.
What,
we'll
no?
just go through the last of these, but again, I'm gonna find the video here and post it. I have it in my YouTube collection. Reset stop loss after failed orders. Again, this came from the video. I have it set. I suggest you to. You can do auto close. This will close a position if it goes for a certain number of days. I don't recommend this, and I'll show you why in a second when we look at the results page, because some of my results have taken 4 months. And this is where, you know, patience and subscription fees come into play. Shorting. So again, a lot of this is shorting is basically selling and making profit when things go in a downward direction, right? So I also do shorting, automatic shorting, maximum open positions, 9, 10% profit, trailing stop percentage. On the shorting, I have my trailing stop set pretty tight because, you know, if it starts to bounce up, I'm going to cancel out and just wait for my trigger to buy it the other direction. Again, a lot of these settings came from the video that I'll be posting. Dollar cost averaging. This is, you know, for anybody doesn't know what dollar cost averaging is, if I purchase something, let's see, at this level up here, 35,000. Now let's use a different. We'll go back to GMA, no, AMC. If I bought something up here at $16.31 and it starts to drop, well, I'm now out of money. You know, I'm looking at a loss right now. And this is something that's really important for all you new people who are trading, is you have to get into this mindset that when things drop, don't look at it as like, oh my God, I'm losing money. Look at it as, oh my God, the price just dropped. Now's a good time to get more. So, you know, think about it this way. If you bought a Honda, would you rather buy it at $1,600 or would you rather buy it at $700? Or yeah, $1,600 or $700? I think everybody would answer, I would buy a car for $700 and not $1,600. The problem is that, hey, I bought my car at $1,600. Well, cars is a bad analogy because when you're buying shares, what you can do is dollar cost average, which means if I buy my shares up here at $16.31 and I buy, say, 100, I just spent, you know, 1,600, and we'll just say $1,600. If the price drops down here to $7 and I buy 100 more shares, I've bought 100 shares at $7 and I bought 100 shares at $16. I bought 200 shares at the price, the average price between 17 and 16. So let me just calc. So the average price, 7 plus 16 divided by 2. I'm now paying $15 a share, right? So originally I paid $16 for my shares, and then it dropped down to 7. I bought another 100. So what that did is it made 200 shares now at $15. So what happens is when this starts to rise again, now it only has to get to $15 for you to start profiting instead of $16. And so that range right there is your dollar cost average. And that's what dollar cost averaging is. I do not set that for my crypto hoppers, but I do it a lot in my trading, like my AMC shares. AMC is a great example, and this downward slide yesterday or 2 days ago, yesterday, is a great example. This is one where, you know, it was like Friday and all the guys are like, oh, Wall Street Bet says it's going to go. And it was up at like $19, $21. And the industrial guys, like, they just overnight, this yellow area, by the way, is after hours and pre-market. This dark area is the day, or I'm sorry, this is aftermarket. This is pre-market. This is the day. And that's what those colored bands in the background are. So in pre-market, you know, aftermarket, it bounced around and ended up way up here at $21. And so in pre-market, the industrial guys are just like, you know, screw those Wall Street bets guys. We're going to press the price down. And they did. And so when it opened, it was down to $11. And all of the industrial automatic machines kicked in at right when the market started. So they bought a bunch of shares, and that's what you see. And you'll see this with pretty much every spike at the very beginning of the morning. You'll notice that you can't really start trading until 6:30 in the morning as just an individual trader, because that first half hour is basically dedicated to all these machines the banks have to resolve all of the stuff that all of the trades that they received overnight, right? So all of this stuff happened, but nobody was actually making trades. These were just promises on trades that happened overnight. And this is what, you know, basically, if the market was open and they were still trading, this is what the price would have been if they were haggling. And then when the market opens, everybody who was haggling in here, who had buy orders, starts to buy, and everybody who had orders that start to sell do their selling. And that's what you see here with this volume, right? And what happened is that more people wanted buy orders than sell orders, so you have a big spike. And then in the next, so that happens for about 10, 15 minutes, right? That's 3 5-minute bars. Then the industrial guys got it started again. They've got the next 15 minutes. And you can see they worked really hard at, you know, this is the brokers. The brokers are just like, all right, guys, we're going to lose a bunch of money if we don't tamp this down. So they sold a bunch. Then they had to fulfill their clients' buy orders. And then they sold a bunch more. And then they just kept selling. And their clients were like, oh, we want these shares. Okay, sure, we'll take your money. And with them, they press. This is where they basically betrayed their investors and started pressing the price down. So their investors that came in here, right, at, what do we got? Right there is where, you know, individual traders are allowed to trade. So you got a bunch of people who just got onto Robinhood and they were able to buy up a little, but then those industrial guys just kept pressing their thumb down. And then the Wall Street Bets guys woke up and got out of bed, and then they had a good run, and then the industrial guys came. They had a good run, and then the industrial guys came. And this happened all day long. And finally, at this big run at the end, the industrial guys are just like, is the CEO from Robinhood is on TV in this period right here. So news is happening, and people are watching, and the industrial guys are just sitting there pressing their thumb down while everybody's watching on TV. And so that was Thursday. Oh no, so that was Thursday. I'm sorry. This was the last run where the guy was on TV. So anyway, that's just a little bit of chart analysis. To wrap up about Cryptohopper, that was just kind of explaining how chart movement works and stuff like that, just to help you understand a lot of these settings that I've discussed over here in the Cryptohopper. But going back to my dashboard, for this Binance US, the way that I had it set up with all of the settings that we've done in the last 2 videos, it's now trading Bitcoin against all these coins, the coins that I had set up in my base config, which we went through. So Ethernet's being traded, Litecoin's being traded, Chainlink's being traded, Bitcoin Cash, whatever this one is, I forget. And then Tezos. Tezos is not a good, it's not performing well against Bitcoin. So all of these results are, how is this particular coin performing against Bitcoin? Because my Binance is trading Bitcoins. Right now, most of these coins are underperforming, but that's okay, because what happens is that Bitcoin, as we all know, things, it'll have its spikes and it'll flatten out. Let me pull BTC/USD. Oops, not that one. Okay, so Coinbase is fine, but the price of Bitcoin is going to go up and down, and the price of the other coins is going to be fluctuating on its own, but it's going to be the difference between those prices on Bitcoin and the other coins, where these percentages come in, and these percentages sometimes go positive. And it's at that point where my Cryptohopper, using those settings that we've done, starts to trade, and it starts to wait, and it looks at that 10% profit margin that I have set, and it uses that trailing stop trigger. And you can see that trailing stop trigger is not done so well in a few cases. But a lot of times you'll see here that says the trigger was the Cryptohopper app. That's me kind of monitoring the app myself. I found that, like, I'll hold a lot of these things and lock them, because I was only getting about 2.5%, because I think that setting that I just changed was not so good. So we'll see if that changes. But I was only getting 2.5%, even though I was asking for 10. So I've been locking these down in hopes that it would get better profits. But again, Uniswap, we were talking about this one earlier, Daniel. It's like a kitty coin, right? Like Dogecoin. And so I stopped selling it because it sat in my Cryptohopper for like 118 days before it finally went above the price of Bitcoin. Comparatively speaking, it finally achieved, let me see, BTC, Uni, chart. There we go. Coinbase. So here, the prices of Uniswap versus Bitcoin finally crossed, and Uniswap was worth, the price I bought it at was greater than the price that it was trading at. So that's where I got my percentage. So this Cryptohopper, and this was from Bobby's original thing, and I'm recording this for him to review. Hi, Bobby. What happens here is I just let these run constantly, 24/7, and no emotions involved. But using those settings, it goes in, it trades these coins, and a lot of times you're going to see a negative result in your open positions, because the thing sinks against Bitcoin right now, because Bitcoin is crazy. It's going up to 40,000 and then coming back down to like 30,000. So it's swinging all over the place. But what's happening is, while it's swinging, these other coins are doing their own thing, and it's at the points where they cross and these things go positive when I sell. And that's why you see the results all in green. And these ones mean it was using my back-tested script that I deployed. These ones, I had just had them on hold, and I opened the app and I said, oh my goodness, it's at 9%, sell. And I pushed the button in the app, and that does the sell for me. They do have a companion mobile app, which I use mostly. I mostly use the website just to set up my configuration and set these fields. I don't really use the website that much. I use the app on my phone mostly. Over here, it keeps track of your stats, how much you've invested, how much it's bought and sold, and how much Bitcoin of yours it's wagered against all of the other ones. Your total returns. This was basically an addition of all your negative returns right here. So it's kind of misleading. This one is the actual, this is the performance that you really want to see. What you do is when you start this, whatever you invest in your Bitcoin, you'll want to edit this and set it to what your original Bitcoin investment was. And you can see that I set this, I don't know, months ago, almost a year ago, I think. And I was only starting with 0.5, like a nickel worth of Bitcoin and some change. And from there, I've got 8 cents worth of nickel, so I've gone up 53% from all of these little teeny weeny trades, right? So I've gone from having a nickel in Bitcoin to 8 cents in Bitcoin, which is, if you do the quick math, it's $500 to $800. So I've made $300, and a 5-to-3 ratio is a pretty good return. Now, again, this is my Bitcoin, my Binance US hopper using Bitcoin. I also have a Coinbase one using US dollars, and this one is performing amazingly. Again, you can see here, my start balance was $1,600 that I had over in Coinbase Pro, and it's gone up to 4,000. It's gone up 158% by using this thing. And I think this is what caught Bobby's eye. And Bobby, when you're watching this is what you're also going to want to set up a US dollar one to trade. And again, the video I'm going to post that I got all of my knowledge about this stuff from, he describes all of this and how to set up the two and why to set up the two. But same thing, base config. You set up your strategy. I'm using the same 5-minute RSI BB crossover. The difference on this one is the coins. I've got, when you're trading US dollars, you can trade against any coin. And so they've got just all sorts of stuff in here. The limitation comes from your subscription, right? We discussed subscriptions in the beginning of this thing. We're going to run out of time here on Zoom too, so I'm going to wrap this up pretty quick. But over here, you can have up to 15 coins to trade because there's so many, right? They don't want you to be trading everything, and your subscription limits that. So if you have the $49 subscription, you can have, I think, 20 coins. And if you have the $99, you can have like as many as you want. I've traded Bitcoin Gold. I've traded, oh my God, I've traded Uniswap. We've talked about that. Maker's a good one. Kyber. These are all, if you believe in those coins and you want to trade them, you can move those over into the ones that you trade. These are the ones that I found have performed the best. And, wherever your sources of finding like what your best bets are on Bitcoin, follow your information. If you think DAI is going to trade, put it over in your thing, trade it. For me, these are the ones that work best for me. And these are the ones that kind of are talked about and they have the most volume, and you can find volume and stuff like that. You can see it over on Kraken, I think, prices. Right, so you can sort by market cap, and you can see these are the coins. Yeah, Ripple. I mean, Ripple's funny because it's been delisted off of Coinbase and Bitcoin US, but it's an international coin. So people in the UK and in Singapore, Those are the folks that are in the group who are in. You might still be able to trade Ripple, and a lot of people believe in it. I mean, look, got a 41% increase, but I can't trade it anymore because I live in the U.S. and you know everybody's freaking out about it. Meanwhile, Uniswap is doing really well too, and even though I decided to stop trading that one, but this is a good place to go, Kraken or wherever you go. But look for volume, look for market cap, and those are the coins that are going to be performing the best. And you want to look for at least 2 million or a billion. So things like Algorand and stuff like that. I might be looking at these a little bit closer after this video. But just do your research and then figure out which coins you want to put in here. And then you can set the percentage amount to, it's a percentage against your total holdings, right? So I have $4,000 now. I only had 1,600 to start with. So 20% of 4,000 is now 850. When I first set this 20%, when it was 1,600, this number was only about $300. And, I can slide this back down to $300 if I wanted to, which is what, 7.5%. So 7.5% of my total holdings will be traded against any coin. So $300 at a time. And what that does is allows, if you have $600 or $800 tied up in Ethereum and suddenly Litecoin is coming up with its RSI and BB, well, you don't have any money to trade Litecoin, so you just missed out on that. So by setting this down at 300, you're not going to be raking in the profits that you'd be making at 800. Well, it's being held, but you'll also, you'll have more coins being traded. So again, that comes down to your personal preference on strategy. Do you want more coins trading at smaller percentages, or do you want, $300 at a time being traded, or do you want $800 at a time being traded? The percentage is going to be the same, whatever you're reaping. We've got 10 minutes here. So you have to decide, do you want higher returns by risking more, or do you just want to risk, a limited amount and just have steady returns? So again, that comes down to personal preference. Strategy, same. We already went over that, but I just want to make sure. Sell strategy, stop loss, trailing stop loss. I wanted to change this to 49. Save. And trailing stop loss percentage is actually going to be 1.49. This one's going to be 249. Save. And I'm just changing those because we just did that study a second ago, and I want to do it while I'm thinking about it. Anyway, so going back to the dashboard on Cryptohopper, since we're running out of time here, again, because of my settings, right now I have $800 at a time being traded against each of these currencies, which I will probably change because I'm thinking that I want more coins being traded at just smaller percentages, just because it's just more activity and it's just, more trades happening, more pennies like trickling in, if you will, rather than waiting for dollars to come in. But what you're seeing right now is what I was describing earlier. This Phil coin is actually trading against the US dollar at 1.6% after 3 days. Meanwhile, ZEC coin is down 25% against the dollar, but it's been holding for 14 days. And if you watch the numbers change right here, and these do change in real time, by the way. If we sit here and watch it for a second, it goes from any of these, there it goes, 26 just changed from 21, 47 just changed from 49, 48. So you can see, you know, the live numbers happening on your hoppers as it's doing its thing. Once these start to get above like 3 or 5%, that's when you want to sell them. And so for me, again, this is personal experience. When I see something come up in there, I lock it down because I've just been wanting to just see how high it'll go. And also, I don't want my stop loss to kick in on a couple of these because some of them I locked down and it went way below what my stop loss was going to be. And if I unlock it, it'll automatically sell. And I'll take that loss at whatever that percentage is. And so I lock them down because I need them to come back up to less than 3%. So anyway, down here, you can see some of my returns. This one, I just, you know, almost a 20% return. Almost a 20% return. So again, these are bots. These are great. These are how I've made a bunch in my crypto. And we're also running out of time. So I'm going to take the conversation back to our presentation and talk about this week's strategy just for a second. I don't know who's left here. Got Brian, Serena. Yeah, so thanks for joining, guys. You know, this week, you know, there's a lot of chatter in our group. You know, obviously about silver. We've seen stuff, you know, and I got to say, I joined the group in this app that I downloaded, 2 months ago, and it's just been spectacular. I mean, the reason I'm even doing these video series is because I've come to trust the people in this group, and I hope you will too. And I hope that you're a fair player. That's important. You know, we all want to play fair, and we're all trying to help each other out. And you can see that, you know, by helping each other out, we all win. And, you know, if you go over to places like StockTwits and stuff like that, there's people there that are just malicious and they just want you to lose. And they're going to give you false information, and they're going to, you know, make you feel low, and they're going to tell you what a loser you are, and, you know, bro you. And I don't bro, bruv. So here's a couple of things to take away from this week. Robin and I discussed at the beginning of the first video, Robinhood has restricted all of these, and a lot of these tickers you'll see are the ones that we've discussed here, right? We've got AMC, we've got GM. You can't trade General Motors, which is ridiculous. INO, a lot of people INO is the electric vehicle that a lot of people have gotten into. That's a competitor with Tesla. Myrna, I've had Myrna since last October, and now I can't trade it. Naked, it took a beating. You know, that was like the fourth kid on the list of all the Wall Street bets. It had GameStop, you had AMC, you had Bed Bath & Beyond, and you had Naked and Nokia. And Nokia and Naked took the biggest beating of all those stepchildren. What else do we have in here? Starbucks, you know. But this one here, silver, this got my attention. And, you know, Sundial Growers, right? So pot stocks and Workhorse, and Zom. Those are all stocks that we've discussed in this group that they're restricting now, and it's just infuriating. So a lot of people have posted there was a link back up here for the petition. I'll repost it. Oh, nice. Jarek. But there's a link back up here to I want to repost it if I can find it. There's a link back up here to there's a class action suit or a petition that you can sign, and someone might actually put it up. But Robinhood is screwing over a lot of people on their own decision because they couldn't cover their freaking margins. It's because they're a bro stock, run by a bunch of bros who like to have like ping pong tables and beanbag chairs in their offices, and those things cost money. Like offices cost money. So all of your losses you're taking on at Robinhood, in my opinion, is money that they have to margin out somehow, and that money doesn't come from somewhere; it comes from their users. And what happened this week really, really exposed, a lot of the malfeasance that goes on, and like it always seems kind of suspicious how an app like that could get away with like marketing to kindergartners because it's a simple app, it's easy to use, and that's its benefit. And as a web developer myself and someone who's developed mobile apps, I mean, those are the things that you plug in there: nice big round buttons, and colorful things, and moving things, and things that catch your eye. And Robinhood has done a very good job at that, but they've also done a good thing of like hiding where to find how to set a limit order. I've taken a bunch of just stupid losses because I didn't know where to find the button. So everybody has their opinions about what to do with their Robinhood money, but I'm moving mine, especially after this fiasco with Dogecoin. On Sunday night, it was up here at 650, which I'm just kicking myself for not having sold on Sunday night. When I looked at it, like right before bed, I'm like, oh my God, 650, I can almost pay rent this month from that. And then today it's worth, $200. And all because, Elon made a pump and dump again. But I think it was Adair who was in the group, who was just like, you know what, I'm holding until December. You just hold strong. I bought it under a penny, and so for me, like, it's all just upward, right? So it'll probably hit 650 again or more.